Imagine a single company so rich, so powerful, and so influential that its wealth made today's trillion-dollar tech giants look small. Apple, Microsoft, Amazon, and even Saudi Aramco combined would not come close to its scale. Yet most people have never even heard its name. This was the Dutch East India Company, a 400-year-old empire of money, ships, and influence that rewrote the rules of global finance and reshaped nations. And here's the twist. Behind this mega company stood a royal dynasty, quietly pulling strings in ways we still feel today. Before we unpack the secrets of this $7.9 trillion mystery company, let me quickly ask you something. Where are you watching this video from? And what time of day is it for you? I always find it fascinating to see people from different countries and time zones join this conversation. Drop it in the comments. I'll be reading them. Now, let's get into the story. The Dutch East India Company, or VOC as it was called in Dutch, was founded in 1602. To understand why it mattered, you need to picture Europe at that time. The world was opening up through trade, exploration, and conquest. Spices like nutmeg, cloves, and pepper weren't luxuries. They were wealth itself. Whoever controlled them controlled entire economies. The Portuguese and the Spanish had dominated these trade routes for decades. But the Netherlands, a small nation compared to these giants, had an idea. Instead of letting individual merchants compete with each other, they centralized everything. They created a single company with state backing, exclusive trading rights, and the ability to raise money from investors. This was the birth of something we all live with today, the publicly traded corporation. The VOC was the first company in history to issue shares. Ordinary citizens, from wealthy nobles to shopkeepers, could invest. And once you invested, you could sell your stake on an open market. Yes, they basically invented the stock exchange. Amsterdam became the world's financial hub because of this, and the idea of modern capitalism was born. But here's the shocking part. If you adjust for inflation and compare wealth across time, the VOC at its peak would have been worth around $7.9 trillion. To put this in perspective, Apple hovers around $3 trillion. Saudi Aramco has been valued close to $2 trillion. Together, they are still far smaller than what the Dutch East India Company controlled in the 17th century. That's the scale of dominance we're talking about. So, how did one company get that rich? It wasn't through apps, phones, or oil. It was through global monopoly power. The Dutch East India Company didn't just trade spices. It controlled territories, operated armies, minted its own coins, and even signed treaties with rulers. It blurred the line between a corporation and a government. Imagine if Amazon or Microsoft had its own private military, its own navy, and the legal right to declare war. That was the VOC. The company's ships were its lifeline. At one point, the VOC owned thousands of vessels, making it the largest naval fleet in the world. These ships transported goods like nutmeg from Indonesia, pepper from India, tea from Ceylon, and textiles from across Asia back to Europe. But the company didn't stop at trade. It established colonies, seized ports, and built fortified bases. It ruled parts of Indonesia like a colonial overlord, extracting wealth while suppressing resistance. Now, here's where things get interesting. Behind this mega corporation stood a royal dynasty, the House of Orange. While the VOC had shareholders and directors, the Dutch ruling family benefited enormously from its success. The House of Orange, through influence and political maneuvering, made sure the VOC served Dutch state interests. Wars were fought to protect its trade routes. Rival nations were crushed or outcompeted. And the profits flowed back into the Dutch economy, solidifying the power of this royal family. But it wasn't only about money. It was about shaping the modern world. The VOC pioneered concepts that now dominate global finance. Corporate governance, boards of directors, shareholder meetings, dividends, all of these ideas came from this company. What you see today when you look at Wall Street or the London Stock Exchange is, in many ways, the VOC's legacy. And the tactics it used were ruthless. The company enforced monopolies with violence. In the Banda Islands, where nutmeg grew, it slaughtered or enslaved entire populations to maintain control. If anyone tried to undercut its prices, they were eliminated. This was not free trade. It was corporate imperialism. Despite this brutality, the VOC fascinated Europe. Ordinary Dutch citizens saw their wealth grow through dividends. For the first time in history, everyday people could own a slice of global trade. The middle class in Amsterdam and other cities thrived because of this. The stock exchange became a place not just for elites, but for merchants and even small investors. It created a culture of speculation and finance that looks eerily familiar today. At its peak, the VOC employed tens of thousands of people across continents. It had warehouses in Europe, forts in Asia, and influence stretching from Africa's Cape of Good Hope to Japan. It wasn't just a company, it was an empire. And like many empires, it believed it was untouchable. But even trillion-dollar empires collapse. By the 18th century, corruption, wars, and mismanagement began eating away at the VOC's dominance. Directors siphoned profits for themselves. Wars with England drained resources. And new players? like the British East India Company rose to challenge Dutch supremacy. By 1799, after nearly 200 years, the VOC dissolved. Its debts were enormous, its influence gone. The Dutch government took over its holdings, and the once mighty corporation disappeared into history books. Yet its legacy didn't die. The financial structures it pioneered live on in every stock market today. The model of merging state power with corporate ambition shaped future empires, from the British Empire to American corporations. And the quiet hand of the House of Orange ensured that the dynasty stayed relevant, tying royal power to the world of finance. Think about that. The most valuable company in history was not a tech firm or an oil giant. It was a 17th century shipping monopoly that weaponized trade, finance, and state power. And its shadow still falls across our world. That's the opening of this story. In the next part, we also look deeper at how the Dutch East India Company Das financial tricks still echo in the systems we use today, from Wall Street speculation to central banking. So here is my question for you. If a single company could be worth $7.9 trillion 4 centuries ago, do you think something similar exists today, hidden in plain sight? When you look at modern finance, it's easy to think that everything we have today, stock markets, investment funds, global trade, is a recent invention. But every part of this system traces back to the Dutch East India Company. It didn't just make money. It built a framework for how money moves, grows, and controls power. And if you understand how the VOC operated, you'll see that our modern economy still follows its blueprint. The VOC was revolutionary because it turned trade into an investment vehicle. Before it, merchants had to finance voyages alone or with small partnerships. If your ship sank, you lost everything. The VOC changed this by pooling capital. Investors bought shares, spreading risk across many voyages. This was the birth of limited liability. You could invest without risking total ruin. That idea transformed risk into opportunity. It made capitalism scalable. But it also introduced something new: abstraction. Investors no longer saw the ships, the sailors, or the lands they traded with. They saw numbers. They saw dividends and balance sheets. Wealth became something you could own without touching. You didn't need to see the goods. You only needed to see your returns. That mental shift changed everything. It made finance more powerful than trade itself. This abstraction is how modern markets work. People buy shares of companies they've never visited, trade currencies of nations they've never seen, and speculate on resources they'll never use. It all began with the VOC's model. It separated ownership from labor. It let capital grow without context. And that detachment gave the wealthy a permanent advantage. They could make fortunes while others did the work and took the risks. Now, let's talk about control. The VOC was not just a business, it was a monopoly. The Dutch government granted it exclusive rights to trade with Asia. No one else could sail to the East Indies without its permission. If you tried, your ship would be seized, your goods confiscated, and your crew arrested, or worse. This monopoly meant infinite pricing power. The company could dictate terms, fix prices, and control supply. Every merchant, every buyer, every consumer, whether they knew it or not, was subject to the VOC's rules. This model still exists. Modern corporations dominate markets by securing exclusive patents, controlling distribution, and crushing competition. The VOC ODS strategy of using law and politics to maintain control laid the groundwork for corporate lobbying today. The company didn't compete, it captured systems. That's what true power looks like. The House of Orange understood this perfectly. As rulers, they saw that aligning state power with corporate wealth was the key to dominance. The VOC served as both a profit machine and a geopolitical tool. It expanded Dutch influence across oceans. It brought wealth that financed wars, infrastructure, and diplomacy. In return, the royal family protected the company's interests. Together, they created a fusion of state and business that still defines global power today. Think about how governments now bail out corporations deemed too big to fail. That idea started here. The VOC was too valuable to the Dutch economy to let collapse. When it struggled, the state intervened. When wars threatened its profits, the state sent fleets. The line between private enterprise and national policy disappeared. The same logic drives modern bailouts and corporate subsidies. When wealth and politics fuse, the system stops serving the public and starts serving itself. The VOC also pioneered corporate secrecy. Its operations spanned continents, its records were complex, and its profits were guarded. Ordinary shareholders never saw the full picture. Directors manipulated numbers to protect themselves. By the 1700s, corruption was rampant. The company inflated costs, hid losses, and paid dividends from borrowed money. Yet the illusion of success kept investors loyal. Sound familiar? Modern financial bubbles, from Enron to subprime mortgages, use the same playbook. Illusion fuels trust, trust fuels speculation, and speculation builds empires. At its height, the VOC's economic reach was unmatched. Its annual trade value exceeded many European nations' entire GDPs. In some years, it accounted for over half of global maritime trade. The company's influence stretched across Asia, where it established trading posts and colonies. In Java, it built Batavia, now Jakarta, as its headquarters. From there, it ruled territories, extracted resources, and taxed populations. The company even minted its own coins, another first in corporate history. By issuing money, it blurred the line between commerce and governance. The VOC's coins circulated in markets across Asia, often more trusted than local currencies. The power to issue money meant the power to dictate value. The same dynamic exists today with reserve currencies. When a single entity controls what counts as money, it controls the system itself. But the VOC's wealth came at a cost. Its methods were violent. When local populations resisted its monopolies, it responded with force. In the Banda Islands, where nutmeg was grown, the company killed or enslaved nearly all inhabitants to secure its supply. In Ceylon and Malabar, it imposed taxes and trade restrictions. In Japan, it operated under strict supervision, adapting to local rules, but always prioritizing profit. Wherever it went, it reshaped economies for its own gain. The company's presence was never neutral. It extracted, controlled, and ruled. Despite its brutality, the VOC became a model for others. The British East India Company copied its structure almost entirely. Later, the French and Danish versions followed. Even America's first trading corporations borrowed ideas from it. Every empire learned the same lesson: control trade, control wealth, control power. What makes the VOC story remarkable is not only its scale, but its longevity. For nearly 2 centuries, it dictated global commerce. It survived wars, famines, and revolts. It outlasted kings and parliaments. And all along it maintained one illusion, that it existed to serve shareholders. In truth, it served the few who controlled it. If you study financial history, you'll notice the same pattern repeating. Wealth concentrates, corruption grows, systems collapse, and new ones rise from the ashes. The VOC's fall was inevitable, but its ideas survived. Limited liability, corporate monopolies, shareholder profit, government protection, these pillars still support our modern system. The question is whether we learned from it. Have we built safeguards, or have we simply replaced wooden ships with algorithms? When financial institutions move trillions of dollars today, are they any more transparent than the VOC's directors were in the 1600s? The parallels are hard to ignore. Both systems reward scale over fairness. Both depend on trust without visibility. And both are rooted in the same principle: whoever controls capital controls the world. We'll explore that more in the next part. How the VOCAS influence stretched beyond money into politics, shaping modern capitalism itself. As the 18th century unfolded, the Dutch East India Company began showing cracks. Its empire was too large, its books too messy, and its leadership too entangled with politics. The company that once symbolized innovation and wealth had become bloated, corrupt, and dependent on state protection. Yet, even in decline, it left a shadow that still defines how global power works today. Because what the VOC really proved was that money, when given structure, law, and protection, can outlive nations. The VOC's greatest legacy was not its ships or its trade routes, but its system. It showed how to turn commerce into governance. Its boardrooms made decisions that shaped millions of lives across continents. Shareholders in Amsterdam determined who could trade, what prices should be, and even which rulers to support. They didn't hold armies directly, but they controlled the flow of goods that armed them. It was the earliest version of what we now call economic policy, set not by governments, but by profit-driven boards. This model evolved. After the VOC collapsed in 1799, its assets were taken over by the Dutch government. The royal family inherited much of the influence the company had built. The House of Orange turned economic control into political dominance. Wealth built on spice, silver, and slaves funded their power at home and abroad. And through colonial networks, that influence spread across Asia and Africa. Even after the company disappeared, its mechanisms, monopoly, centralization, state partnership, became the DNA of empire. When you look at the British Empire, the same structure emerges. The British East India Company used VOC-style joint stock funding to finance conquests. It governed territories directly, minted money, and collected taxes. In India, it became the government before the crown did. The same corporate logic drove expansion in Africa and the Caribbean. Every colonial empire that followed operated under the same assumption: economic dominance first, political control second. This logic extends to our era. Modern multinational corporations, from oil giants to tech monopolies, follow the same rulebook. They build infrastructure, influence policy, and operate above borders. They serve shareholders, not citizens. Governments depend on them for growth and employment, just as the Dutch once depended on the VOC for trade revenue. And like the VOC, they justify every action as in the public interest, even when profits come first. The Dutch understood that wealth was not about gold or silver, but about flow. Money gained power only when it moved, across oceans, across hands, across time. That insight became the foundation of modern finance. Today, global markets move trillions each day, chasing opportunity wherever it appears. But this speed and abstraction come with a cost. When money moves faster than accountability, it stops serving people. It starts serving itself. The VOC's downfall showed this clearly. By the late 1700s, directors prioritized dividends over sustainability. They borrowed heavily to pay investors, inflated asset values, and ignored the collapse of trade routes. Corruption became systemic. Executives enriched themselves while colonies starved. Reports of abuses in Asia reached Amsterdam, but the company's propaganda machine silenced critics. Only when profits dried up did the truth come out. The same pattern plays out in every financial collapse since: optimism, manipulation, denial, then ruin. Yet, even after it dissolved, the VOC's model remained the template. Modern corporations still separate ownership from responsibility. Executives make decisions with other people's money. Investors demand returns without knowing the full cost. Governments protect companies to maintain stability. It's a cycle older than capitalism itself. The difference is scale. Today, instead of trading nutmeg, companies trade data, algorithms, and debt. The product changed, but the structure didn't. Think about the $7.9 trillion valuation historians estimate for the VOC in modern terms. That number is more than Apple, Microsoft, Amazon, and Saudi Aramco combined. It represents not just wealth, but concentration of control. A single corporate entity holding that much power shapes markets, politics, and societies. Now ask yourself, has anything changed? When central banks coordinate bailouts, when global investors dictate policy, when algorithms decide market prices, who truly governs the world? The names changed, but the principle stayed. This is the hidden story behind the rise of capitalism. It wasn't built on free markets alone. It was built on monopolies protected by law, on violence justified by trade, and on profits guaranteed by states. The VOC turned all of this into a formula: repeatable, legal, and immensely profitable. And every empire since copied it. From London to New York, from Singapore to Dubai, the ghosts of that Dutch company still steer global finance. Even the way we think about corporations traces back to it. The VOC was one of the first entities treated as a legal person. It could own property, sign contracts, sue, and be sued. This idea separated the company from its founders and directors. It allowed institutions to act like humans, but live forever. That's how corporations today accumulate power: immortal, adaptable, and unaccountable. The VOC didn't just invent the modern company, it invented the concept of perpetual wealth. What made the VOC unstoppable was its alignment of interests. Shareholders wanted profit, rulers wanted power, merchants wanted access, and soldiers wanted pay. Everyone had a stake in keeping the system alive. The same alignment exists now. Pension funds depend on corporate stocks, governments depend on tax revenue, and consumers depend on supply chains. No one can afford to see the system fail. That's why, even when crises hit, we rebuild it rather than replace it. The irony is that the Dutch East India Company began as a tool of exploration. It was supposed to bring spices and silk to Europe. Instead, it brought home something else: the blueprint for control through capital. The House of Orange saw it early. They used trade to bind allies, fund wars, and shape policy. Their royal fortunes became inseparable from corporate profits. This alliance between monarchy and money birthed a new kind of power, one that ruled without crowns or armies, but with contracts and dividends. When you trace the threads of modern wealth, you end up here. The companies dominating our world today, banks, tech giants, asset managers, operate on principles written 4 centuries ago. They leverage law, manipulate markets, and influence states. They sell products most people don't understand and services no one can live without. They are the heirs of the VOC, built on abstraction, backed by governments, and fueled by trust. The VOC story isn't ancient history. It's a mirror. Every financial innovation we celebrate, every crisis we endure, every debate about corporate power, these are echoes of choices made 400 years ago. The Dutch East India Company may be gone, but the structure it created remains.